Well, looking at the breakdown, it was an across-the-board decline, so production fell, new orders and new export orders were all down. But I think it's important to note that the PMIs aren't actually a great gauge of actual activity. And we already knew from industrial production figures that recent months have been pretty tough for manufacturers, that the industrial production contracted in year-on-year terms in November. So today's PMI really is just about the PMI coming more in line with reality.
Across the region, of course, China's PMI slowed down, Japan's PMI was flat. To what extent are we seeing a muted phase of global recovery, considering also what you just said about whether or not it's an accurate gauge?
Yeah, I think that's right. We are in a muted phase of the global recovery. Japan has recovered from its sales tax hike much more slowly than anyone had expected. China, we know, is undergoing a prolonged slowdown that isn't going to change anytime soon. And aside from those two, Europe hasn't been doing very well. The one bright spot is the US, which continues to perform pretty good.
Now, the Eurozone, of course, is in the spotlight again, with reports saying that Greece might elect a government that will try and renegotiate their existing terms of a bailout plan. To what extent should investors be concerned, Daniel?
Well, markets so far have been quite sanguine about it, but and I think there probably are some reasons for that. There's no guarantee that the current government is going to lose the election later this month, and the opposition has said that it won't leave the Eurozone, and it wants to renegotiate its bailout plan rather than completely tear it up. Also, the Eurozone is probably a little bit better prepared. It's got bigger bailout funds now. The ECB has its OMT plans, and it's about to launch quantitative easing. So all of that should limit contagion. But we know that the last crisis began like this, and we can't be sure that the policy advances are big enough to deal with any renewed difficulties if they spread to other countries. So I think it's a major downside risk to the Eurozone outlook, and we shouldn't be complacent about it.
What sort of impact could any fallout in the Eurozone have on the manufacturing sector here in Singapore, Daniel?
I mean, it could be a really big deal. We know that the Eurozone is one of Singapore's bigger trade partners, and the Eurozone's weakness has been a factor keeping export demand subdued for this country for the last 5 or 6 years, really. And also a Eurozone crisis would have knock-on effects for the rest of the global economy. So if this situation does escalate, it could be a really big issue for Singapore.
Thank you very much, Daniel. Daniel Martin is Asia Economist at Capital Economics. Thanks for joining us on The Bottom Line.